Welcome back to the Cosasverdes show, where we cover Bitcoin and altcoin price action to help you have a more profitable crypto journey. Today, we're essentially, it's going to sound corny, but we're going to bake a cake. We're going to have a lot of layers here, and what we're going to do is we're going to marry two specific time frames, the hourly and the daily, so we can be nimble on our feet and know when price is moving here, and we can adjust our probabilities to the upside and downside accordingly with very, very specific levels. And I would encourage you to follow this along. If you see lines on my chart, draw the damn straight lines on your chart. It's going to help you so much. And you can pause the video and do it. I promise you it's going to be very helpful. And then what we're going to do is we're going to mix some EMAs with daily RSI so we can further create some more probabilities, or when can we expect price to rise up and perhaps break out of this descending trading channel that price is stuck in. So let's get into the kitchen or the bakery and let's bake this damn cake. Let's get it. Right now I'm on the 1 hour chart, and I'm going to show you the different layers before we cover them. I'm going to use structural analysis that will look like this. And if you want me to label it, go ahead and take a look at this now, because this is the stuff that I'm going to cover. Take a look at that. I'm not going to read it for you. These are the things we're working with structural analysis and actually EMAs. There we go. Take a look at that. Daily 10 EMA, 12-hour 10 EMA. This neckline of the head and shoulders pattern on that's easy to see on a micro time frame. I think this was the head and shoulders, right? Or the neckline of the head and shoulders, and price never got back up to it. It's an inverse head and shoulders, more tech. It was, but it broke down. So that's what we're going to work with, the structural analysis with EMAs, and the EMAs happen to align with structural analysis, which makes it even more probable, right? Can you see that? Do you see how this line right, this EMA aligns with essentially a point of control type of deal within this range here from bottom to top of the range. And we're looking for Bitcoin to potentially break out into the top of the range, but it's not looking probable as of now. However, this is offering extra resistance here. So it's going to be harder and harder for Bitcoin to get over this little, this dotted line here. And I have this black triangle here because if price can break out, I think if price gets close to the top end of the box, that it's going to want to test this neckline made by this inverse head and shoulders, and it's going to wick above and then potentially fall back into the channel. That's what I'd be looking for right there. See that? Because then you have the daily 10 EMA coming into play, and it's a pretty common thing. It's got to touch the 10 EMA and then come back down and regroup before it can try higher. So that's what we're working with an EMA and structural analysis on the 1 hour chart. Let me go ahead and get rid of that. And then we're going to marry that to the daily time frame. We're going to, did I miss? I missed one. Daily, let's see here. Daily, here we go. Bam. We're going to throw on the RSI, and I'm going to show you with some boxes here throughout time how price likes to behave in regard to when the daily RSI gets to a bottom point, and it typically has a 3-strike type of rule, and we're going to mix that at the end. So this will be like a bonus for you near the end of the video with how this aligns almost perfectly with what we're going to see on the 1 hour EMA or 1 hour chart. And when two different types of analyses or similar analyses on different time frames happen to align, that simply gives you slightly more confidence or statistical probabilities that that your analysis is sound. So that's what we're going to do. So let's dive in here. No time to waste. All right. I'm going to go back to the 1 hour chart, and you might want to draw these lines on your chart. Don't need the RSI yet. Previously, Bitcoin was in a not so slanted trading range. See that red range? So you can see it broke out of it. So now I essentially drew different ranges on top of it to get the average slope here. All right, you see that? Now, this, I would consider this from this point to that point to be one range. All right. And if price can get above the top of this range and use that support, then it's going to break into the next range. And especially if you can get over this previous neckline, this might be a little hard to get over. And the reason why I have this triangle here is because when a lot of things happen to align, like trading channels, necklines, or the daily 10 EMA is up here. Let me throw on the daily 10 right there. Price sometimes is attracted to it. So I could see in the short term, price getting up to about 32K even. I could see it easily testing this and potentially, but not statistically likely to land on here and try to create a higher low to go up. However, I'm going to show you why I don't think that's necessarily probable. That it would get up here and stay up here without coming back down deep into this channel. And let me show you a couple reasons why. First off, let me zoom way in here to the 5 minute. And I'm going to put on the 12-hour EMA. And we're going to throw on, actually, let's put on the daily as well. It's up here. Typically, when there's this much separation between the 12-hour and daily EMA, when it first gets up there, it doesn't like to stick its landing. These two like to come down and go like this before price can work itself up and out. And these are still essentially separating away from each other. They're expanding away. So that in and of itself, if you go back in time and see all the times that the 12-hour 10, and you can use the MT, can you see this over here? It says MTF EMA. That's how I'm on the 5 minute chart, and I can still see the 12-hour 10 in white and the daily 10 in red. And when these are expanding, typically pumps up, they have to come back down and regroup and wait for these again to kind of go like this. Do you see what I'm saying? And I'm not going to go back in time and bore you with that, but that's usually the way it happens, with a couple of with one particular exception. If you have drastic volatility to the downside, which today's was recent price action is moderate, is strong moderate, but it's not coronavirus type of stuff. Then you get your V-shaped stuff, and that rule doesn't apply. And we are close with the price action volatility to the downside. It is on that threshold of wanting to look like it's it could V-shape. However, I can already confirm. Let's go to the daily chart now. I can already confirm from the daily chart that simply isn't happening. Watch. If you're going to get a V-shape, you get the V-shape on the daily RSI almost right away. See that? If you're going to get a V-shape, well, actually, this wasn't V-shape either. This hung out for like a week and a half here. See that? So that confirmed, you could tell when it's going to V-shape or not. And look what's happening over here in current price action. It's hanging out down here. So it's not going to V-shape. And what we're seeing here is the typical pattern that Bitcoin likes to do when the daily RSI gets to in the deep red. It likes to hang out and have a 3-strike rule where it makes higher lows. Low, higher low, higher low. And usually one or two of them are after the RSI gets above the white squiggly line, which is the EMA, and it makes the shape a lot. So 1, 2, 3. And again, remember, I wouldn't necessarily count that as 3 well, that could be a potential 3, but it usually has to go significantly below the EMA to count, right? So this is significantly below 1, significantly below 2, significantly below 3. 1, 2, 3. And so unless it's a V shape. So that is a difference, and you can tell it's a V shape very, very, very quickly, right? And take a look. 1, 2, 3. This didn't come super crazy low, but it still had to hang out for quite a while. I mean, look at this. Look how much time. 37 days. So let's move this box almost exactly like here and take it to current price action. Right here, we can expect price not to heat up with this analysis potentially until June. This is June 20th. It might have to. So can you have tradable bounces to the upside in the meantime? Absolutely. But price likely isn't going to skyrocket anytime soon in the next 30 days, because not only do you not have a higher low on the daily RSI, which we saw in the previous examples, but you could tell it's not going to V-shape. It's already had its chance and it's done. It's going to hang out for a long, long time. Do you see what I'm saying here? And that is why when I go back to the 1 hour chart, I can be more confident with just EMAs in general that it's not going to be a V-shape. And given that these are accelerating away from each other, right? This is accelerating. Well, it's actually kind of starting to slow down. I think the peak acceleration was right here, and it is starting to slow down a little bit. But the first time it tests into this area with these two separated that far, because of the daily RSI, I can tell it's very likely to follow that basic rule. All right. And if I used ribbons or something, you can kind of see it with ribbons as well. It would pop up into the ribbons and come back down below them, right? With trading ribbons. And because the daily RSI's behavior in the past, and that's just usually how it works, I can feel even more confident with that. So now let's put on another layer, which is that 1 hour, the 1 hour structure here. V-shape correction is pretty much out of the picture now, right? However, there are hybrids. Actually, before I go to the 1 hour, there are some hybrids. Actually, I'm still on the 1 hour. Let's go to the daily. And we can zoom into September right here. So this is a mixture between the 30-day period and a V-shape. Take a look. But what did price still do, or what did that RSI still do? It still came down, bumped its head against the EMA a couple times, and made a higher low. And so this is about, when you don't get a V-shaped correction and huge volatility, this is about as fast as, price can recover, typically. Look, and again, in light of, with the exception of huge volatility in a downtrend. And this is not the same. This rule, none of what I'm saying applies when Bitcoin's screaming up to from 10K to 40K. These rules, what I'm showing you, don't necessarily apply because that's a strong uptrend. Therefore, the rules don't apply, because if RSI goes way down in a strong uptrend, like in a flash crash, it does have permission to jump right back and V-shape without doing this, right? But we're in a downtrend right now, so these are downtrend rules only. You can't compare this to October of 2020 through I would say March 2021, and that run from 10K to essentially 64K. This rule doesn't apply. All right, so downtrend. This is about as fast as things can recover, and this was late September to October 1st when Bitcoin had a decent run up here. So that took about 7 to 8 days, and if you come out and see this, you can see how it made a low, and this is a tradable bounce to the upside, but it went up where? To the daily 10. See that? And then it came back down, regrouped, and then tried again, only after the daily RSI had a higher low. Do you see that? See how the white, these are the same white and red lines. They were accelerating away from each other. Do you see that? They're getting wider apart. And it came up and tested, and it got knocked down by the daily 10, which is almost always what happens. It's like way over 50% of the time, especially when there's no daily RSI higher low. Came down and boom, then it had permission to go. Do you see that? All right. 8 days is about as fast as it can go. It takes at least a week, but that was that's not typical. And Bitcoin was actually breaking the downtrend. So all of this essentially broke the downtrend. So that might be why it only took 8 days, because it already established a daily uptrend. You see that? So you have a higher high and a higher low daily uptrend, right? And then it broke the daily uptrend, but it had previously had a higher low and higher high structure. And we don't have that. So the likelihood of this only lasting 8 days chilling down here is very unlikely. Do you see what I'm saying here? Am I connecting these pieces in a way, that is understood? I hope this is making sense. And if I'm not making sense, leave me a comment down below. Make sure you're following me on Twitter, Cosasverdes with the number 2 afterward, and my link to my Discord community if you want to learn how to either trade or hodl strategies or hybrid hodl trading strategies. We have a hookup over in the Discord community. And if online communities are not your thing, but you want exclusive updates about up to 10 to 14 times a week, go ahead and hit the join button below this video, and another quick video will pop up describing your options to you. I don't know if I'm piecing this together very well, but hopefully I'm doing at least a decent job. All right, now I'm back on the 1 hour chart. I don't need my RSI. I've used my daily RSI to essentially configure, hey, the likelihood of Bitcoin getting here is okay. It's actually decent. But the likelihood of it getting up there and staying up there and boom, and then getting above the daily 10 EMA is kind of unlikely. And so I just made that drawing. Now what happens if I put on my little structural analysis? What does that do? It wicks above, so potentially it could wick above this channel, hit that neckline, hit the daily 10, use the point of control as support after it gets rejected by the daily 10, which is here. This is probably the most bullish case possible, right? And I would assume that would align with roughly the time frame we saw back from September. So from this down move to there, oh, that's only 3 days, so it's not quite the same. So it's probably not going to happen that fast. That just kind of adds to the improbability of that happening. But that is probably the most bullish case I could see. But do you see why that's improbable? because the daily RSI is probably going to hang down there longer. And that's probably not going to happen. It's not even 8 days. This is not going to recover in 3 days. However, if you see that happening, I think that could have like a 5% chance, but it's single digits. It's very, very, very low, right? Okay. The low probabilities of this might even be, idea might not even be worth considering and keeping in the back of your mind. Therefore, let's think of something more realistic. If it does come up here, it's probably going to get rejected, fall back into this channel, come at least to the bottom of the point of control or the bottom of the range, regroup, and try it all again. And maybe even wick below, make a higher low to this low, and then regroup. And what would happen here if price came down there? What would happen to the daily RSI? It would wiggle around and you'd get some higher lows if that were to happen. And then permission would start building. And then also what would be happening at that time to the 12-hour 10 EMA and the daily 10 EMA respective to each other? They're going to start sloping out if all that were to happen. So something to that effect is way more probable than Bitcoin bouncing and charging up from here. It's just so much more probable that at least the bottom of this range that you can see right now, at the bottom of this range, or at least the bottom of the point of control, so the bottom of the range or the bottom of the point of control is going to be hit. All right, if price comes up here. It is totally possible that we keep capitulating and breaks down and out of there. So I'm not even covering the more bearish, potentially more realistic cases. This is for all the people who have essentially are tying their hearts to the idea of a bounce, because that's what's out there on crypto Twitter and crypto YouTube right now. People calling bottoms and stuff, or at least a strong bounce. I don't see it happening right yet, at least for 8 more days. All right, now let me go ahead and take this off. Let's go to the weekly chart, and let's see if all of this, and this I didn't preface this, but let's see if all of this aligns with the weekly RSI. And the weekly RSI, when it gets this low, has it made a bottom yet, or is it still tanking down? It's still tanking down, right? So typically, you don't recover when the slope of the weekly RSI is that negative. You have to start ticking up, but it's the momentum is down. Do you see that? And see the slope of this, the EMA of it, it's starting to accelerate. So the green line is accelerating away from this. Therefore, that means on a weekly scale, the pressure is definitely down, which is even more evidence that this is not going to turn around real fast. And we can already kind of essentially confirm that with the daily RSI. It's not making the V shape. It's going to stay down there for a bare minimum 8 days, bare minimum, and more likely into June. It's going to take a while, right? However, don't fret though. This isn't good for hodlers, but if you're trading ranges, this is highly profitable because price is going to be relatively predictable because the volatility is going to start chilling out here. It's going to become less and less volatile, and if it can't break up out of those channels, well, what's going to do? It's going to break down below them, and you're going to be able to take on some really good short positions as you're tying these all together, right? All right. Therefore, momentum's down on the weekly. Momentum is potentially establishing itself on the daily, but volatility on the daily is trying to slow down. Therefore, price is probably going to chill out in this box because we don't have a probability to the upside, and volatility looks like it's going to chill out. What do you think that means? It's going to bounce around these lines almost perfectly for quite a while. Could it break above here and go like this and come back down? Yeah, maybe. But regardless, these lines are where it's at. It's probably going to bounce. If it doesn't bounce and you see it come out, this would be your trigger for trading down. You would see it come below this bottom trading channel, use it as resistance, and start making lower lows and lower highs. Then you know it's gonna go below this low here in that case. Do you see what I'm saying? So if you were to see something to this happen, then you realize, hey, it's going to test this low, potentially make a slightly lower low or a slightly higher high, or capitulate even more. Those would be your 3 options. If you saw the bottom of this channel used as resistance, those become the 3 most likely scenarios. A slightly higher low to this area back here from May 12th. So slightly higher low to that one as option 1, a slightly lower low to that one, option 2, or further capitulation, number 3. if you see this signal right here happen. Those instantly become your top 3 probabilities. The 4th most likely probability in that case is that it immediately pops back in, but I think that would be the 4th most likely after it gets rejected and heads back down to make a first lower low. At that exact time, these become your top 3 most probable. Am I making sense? So that's what I mean by being nimble, is you can use the structural analysis even actually faster than EMAs. You can use it as a heads up to the EMAs, and then when EMAs start doing different things on lower time frames, crossing to the downside, whatever, you just get extra confirmation that the move really is heading that way. You see what I'm saying? All right. I'm piecing a lot of things together, and I just really don't know if I'm doing an okay job explaining this. All right, now let's take a look at how low this could go, and let's map out what 30 days is. So let's take a couple options here. Let's make some boxes. That is not showing me the days. Let's go like this. And here. So from this low point, let's map out 30 days. Bam. Let's make a box there. And let's do an if-then type of statement. If 30 days, then this is, potentially what Bitcoin price would look like, especially if it wants to recover and not capitulate more. And if, let's pick 10 days. Let's go roughly 10 days. So from the 9th to the 19th. And this is your more bullish case that it can recover that fast. So let me make more bullish. Let's make that green, and let's make this yellow. All right, now I'll go back to the hourly chart. And again, this is not covering the more bearish scenario. I've already given the most bearish scenario. At any time that this line is broken through and used as a resistance, you know what? Instantly become your top 3 probabilities, right? Regardless of what I'm saying here, it instantly trumps everything I'm about to say. So I'm giving you conditions for the downside, conditions for the sideways, and I'm kind of axing the potential for upside, because I think it's so improbable, it's really not worth analyzing that right now. So I'm giving you sideways probabilities and downside price paths and what to look for, right? Am I making sense? All right. If price were to jump out of here by this time, from roughly 10 days from this down move. Actually, let's move this over just a little bit. Let's move it like this. Then you might see something to this effect where it tries up higher, boom, 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 comes back down in here, tests the bottom of this, makes higher low, tries getting up, makes a higher low to that one. Oops. Let me try that again. Actually, I'll just draw over it. Makes a higher low to that one over here, and then consolidates and breaks out and hits this is my Cosa box. I think if it does break out within 8 to 10 days, I think it's going to hit this line, because that's when this pink line, which is the neckline of the inverse head and shoulders over here, that's when it hits the top of this channel. And when 2 important lines cross, price likes to get sucked into it. And that would be roughly what you're going to see there. So if the more bullish case happens, then this box between May 22nd and May 27th, that would likely be hit, because that's where everything's crossing, right? And price could get attracted to it and try to bust out up and above 32.5. About that time, and that would also be breaking above breaking above this pink line as well. It would bust out both of the pink line and the top of this top channel. Are you seeing that? This would be, however, that means in the meantime you're not seeing upside for at least 10 days. Do you see that? It's going to take a while. And what's going to happen again? What will happen on the daily RSI chart? You'll see higher lows. This is probably the most bullish case. I'm telling you. All right, now, what is a more realistic case? Assuming price doesn't continue to capitulate, you have actually a lot of options because there's more time here. From this point, price could easily, actually the same thing could happen, but here it takes a different path. Then it comes down and breaks below and tests the bottom of this range, and maybe makes a higher low, tries to start getting up, and it can't, and then it makes an even lower low, and then so that's all the way down to 22K, and then it recovers. And here's where it would start recovering fast. If it could do something like that, it could really start flying at that point. Test again, consolidate, and then start busting up. If price needs 30 days, I think it's very likely to make a lower low. And that would I think that would create a higher low in daily RSI, and all of this would allow the weekly RSI to start getting a more neutral or potentially positive slope, because the volatility will begin decreasing. Because all this time here, these 10 days of chilling sideways would allow volatility to decrease. You have 1 day or 2 days of volatility decrease. Another quick pump, but that would allow 1, 2, 3. And remember what we did near the beginning? 3 strikes. And this pattern would likely create 3 strikes of bullish divergence or higher lows on the RSI if something like that were to happen. And also, what else would this hit from my previous analyses on different days? What else aligns with this? Oh, show me, Tim. I don't know. All right, well, I'll show you, damn it. All right, let's do this. We got weekly 200 EMA. I'll make it orange. And initiate. Boom. What would that be? It would be a wick below the weekly 200 EMA. And what happens in almost every bear market? Price goes below the 200 EMA. And where does it typically want to target? The weekly 200 MA moving average. So let me make this orange if I can find the color schematics. Bam. All right, now I'm going to go to the weekly chart and see this pattern. So I'm going to keep my pattern on there. Hopefully you can see it. And I will put on the 200 MA. There you go, right there. Boom. Ta-da! So I'll go back to the 1 hour chart now. So that's the MA. And if you go back in time, where do bear markets hit? It even went below both of them. Went below. So the MA's the dull one, the EMA's the bright one. Went below both of them. Previous bear action. Where'd it go? To the MA. 200 week MA. Go back in time. If you extend this line, where did it go? Below both of them. Therefore, this is, in my opinion, if this takes 30 days, I mean, that could be the end of it. That could be if it were to do something to this effect. And all of it, now you can see. So I guess I prefaced the video wrong. I actually mixed in the weekly. The 1 hour, I married to the daily to make sure it makes sense. And it does. And it helps me understand that I shouldn't even analyze things to the upside. Rather, all of my analysis should focus on how can I tell if price is going to go sideways and choppy, or maybe slightly lower lows, but sideways and down, or if price is going to capitulate. I know exactly both cases, exactly what I'm looking for at any moment in time if either of those is going to happen. And I know if I'm a trader, I know where my short positions would come in play around the daily 10 EMA, hint, hint, not financial advice. And again, don't try, TA is not trading on futures. Trading is totally different, right? So don't try to just long 100x or 50x. It's the Costa said above the 10 EMA. Don't try that. Don't try that. Trading is totally different than TA. However, if you are accustomed to trading, that could be a potential good entry for you, right? And this is the type of stuff that I go over for VIPs. I'm giving you a little bit too much information because I'm being a blabbermouth here. But in my community might not be happy about that. However, this is Bitcoin, so there's plenty of liquidity for everybody to play with this. The 1 hour, I married to the daily, and the daily allowed me to understand what to focus on. So it reverberates backwards. So the daily gave me information that allows me to understand the hourly that I don't need to analyze to the upside yet, rather sideways or sideways and down only. That's what I gave you. Going back to the daily, I understand 2 different time frames where it could bust out. I understand a couple different patterns and what to look for if it doesn't capitulate, right? And then the weekly also helps me confirm that the likelihood of this taking 30 days to go is very realistic, because that could hit your lower targets for a bear market, which is the weekly 200 EMA and the weekly 200 MA. The 1 hour, the daily, and the weekly all align, and they essentially give information forward and backwards to each other. Do you see what I'm saying? See what I'm doing here? The time frames are they're like in sync or in harmony. It's like a chorus singing together, and they are, they're doing a bass note and major third and fifth type of notes. It's a chord. They're singing in a perfect chord, right? Like G major or something. Actually, no, this would probably be G minor because like minor chords is more for bad stuff. So it's perfect G minor chord, right? And that's what's happening here. When you have time frames all giving you different information and not agreeing back with each other, that is when you simply don't trade and you don't try to force stuff. But in moments like this, when everything's in harmony, you should feel more confident clicking around with your money because things should be more predictable. And if what you predict doesn't happen, we automatically know how to flip and what instantly becomes more predictable at that moment because I've given you all the tools on 3 different time frames on what to look for. Hopefully this was helpful. Go ahead and click this video right here if you want to see a video back from December, how I guessed that capitulation like this was going to happen between May and September of this year. I knew it last year, or I guessed it at least. I guessed it would be probable. I didn't know. And then click this video right here if you want to see my last Bitcoin update so you can see how I targeted downside price action. And you just got Tim about Worldwide. Peace.